So Theo, stage is yours. Looking forward for another great webinar.
Thank you so much, Alex. Thank you so much. So, good evening, everyone. Guys, welcome to another webinar here at the Trading Pit. And actually, this webinar, it's going to be a little bit different than the rest because it's something you don't find in that sense, like in a compact formation on the net. Okay, and many of the education webinars that I write for you and I present to you guys, it's also at a very high level based on my pure trading interaction with the markets for all these years. So without further say anything further, let's ensure that more people they join us now. Okay, so we will start with the title, Significance of Currency Correlation in Forex Trading. Okay, so before we start, as usual, the disclaimer just to ensure that everyone understands and accept that this content is for general information only and is not intended to provide trading or investment advice or any personal recommendations. For you guys who perhaps join us for first time, allow me to take 30 seconds to introduce myself. My name is Theo. I'm Chief Analyst and Trader at the Market Mind Mastery Academy. You can find us so far on YouTube and on LinkedIn and Twitter. Soon we will share the website where you can book your one-on-one coaching sessions if you need, and more trader-to-trader interactive services. So my expertise in the markets, I trade for the last 11 years now. I hold certifications as a certified financial technical analyst and market technicians. I specialized in currency and in currency correlation, and that's why I would like to host a webinar about the subject. On a daily basis, I deliver market analysis for hedge funds, trading firms like the prop firm here at the Trading Pit. I create educational courses for investing and trading. I publish articles in magazines, and I hosted events and podcasts with Steve Ninson, John Bollinger, Daniela Kalle, and Alex Biroglu, and many, many more. They are also on YouTube. You can search and find them. Now, what are the today's subjects and what's on the agenda? So, of course, we will start by introducing what is currency correlation. We will explain about the simple and complex correlations. Some of you may hear this for very first time, and it's something you're really not going to find about simple and complex correlation. It's something that I created. You're not going to find it on the net yet, but I'm going to create some series about that, so the traders they can be aware of the complex and the simple correlations when they trade currencies or any other assets that related to the currencies as well. And we will explain and reveal why traders confused when they trade pairs like minors or perhaps exotic, something that it's not major pair. It means it doesn't have the US dollar as part on that pair. We will explain the US dollar and the gold correlation, as well as the WTI and the Canadian dollar, and some of the correlations, and we will see them better on the chart afterwards. Also, positive and negative correlations. Some currency pairs, they are positive correlated. Some others, they are negative correlated. And at the end, we will check on the charts and find out, is a buy signal on the euro US dollar always the same like a sell signal on the USD Swissy? That's a question I think many of you have. By the way, guys, if you would like to ask anything, please feel free to use the chat below. I just sent a hello just to make sure if you can read my message. Please remember, these webinars are purely for you guys. Ensure that you interact as much as possible. Ask your questions. In trading, there is no right or wrong thing. There is no good or bad question, smart or not smart question. Please feel free to ask anything you want. Okay. So let's start with what is the currency correlation. Now, currency correlation, guys, is the relationship between more than one currency and their connections and reactions to each other. So at the beginning, maybe it's going to sound a bit confusing, but we will go through and explain everything. Okay, so don't get discouraged. So someone asked, by the way, guys, if you don't like to say your name aloud, I can just keep this as a someone asked. Okay. A question came, is knowing correlations is important to trade? If yes, how much percent? That's a great question, actually, and we will answer it as we're going through on this webinar. So typically, the correlation involves two assets, and for a purpose, I didn't use the word currency now. We will name the first asset. Guys, remember, here, especially at the trading pit, we mainly trade the CFDs, currencies, some CFD commodities, and the futures. But now we're going to be a bit more focused on the currencies and commodities. So a commodity and a currency, and but it can also become more complex when we involve the currency pairs that they don't include the US dollar attached. Okay, in a nutshell, that's what we call the complex correlations, because in the equation of a complex correlation, there are three I think this one here. There are three currencies. Guys, when we say the word currency, we mean one currency and only. Okay, we don't mean the pairs. When we say currency pair, we mean two currencies together. Okay, and that's important. I see many traders, they get confused. They say something about, let's say, the euro, but they mean the euro US dollar, which it's not the same case. It's a different thing to say that, the euro price rises, but it's a different to say that the euro against the US dollar price rises, because maybe this euro US dollar rise, it's because of the US dollar weakness. We will see that in a while. Okay, I'm telling you, it's very interesting webinar, because knowing the correlations, you can avoid to get into sideways market, and also in many occasions you can protect yourself against a kind of false signals as well. I will show you on the charts how to read the correlation in real time, and you don't need to use indicators to show you the correlation, because when you use, guys, indicators to find out the correlations, always the indicators, they lack that information. They are not momentum indicators to show what it might going to happen next. They take from that point what happened backwards, and they try to, and they just put out the information, but it doesn't mean that from that point onwards we're going to have the ideal information that we are looking for. Okay, so in a nutshell, simple correlations is when we have, let's say, a commodity that is priced to a currency. Okay, and a complex correlation, it's when we see currency pairs like minors and exotics. So let's see an example here. A simple correlation is the connection between a single currency with either the US dollar or the commodity. And here are a few examples. Every time you guys include the US dollar in the currency pair, you're talking about simple correlations, like the Canadian dollar, it's either moving upwards or downwards, it's rising or declining based against, the US dollar. Okay, now some people may think, okay, so why the cut CHF, for example? If the Canadian dollar drops, it means the CHF rises. Okay, that's true. But how do you get here? It's another step. There is a step in the middle that we need to sort that out before we understand if we want to interact with this currency pair. So when we talk about euro US dollar, and let's say the euro US dollar going upwards, it's because of two things can happen. Either the euro is gaining strength and the euro drives this currency pair, or the US dollar, it becomes very weak, and the weakness of the US dollar drives the euro to move upwards against the US dollar. Okay, guys, this is very important, very, very important. It doesn't mean because the USD Japanese Y moves upwards, it's because of the US dollar strength. Maybe the US dollar is not that strong, but the Japanese yen is extremely weak, and that's why it overcomes everything and it drives this market to the upside. Okay, and for those who may don't know that, if you're new in trading, guys, always, because the currencies, the way we trade the CFDs and the currencies are always traded in pairs, we have the euro and the US dollar. Let me write it in different color. Okay. So euro US dollar, if this pair you see on the chart moves upwards, it's because either the euro is so strong and drives the market upwards, but at the same time, it doesn't mean that the US dollar is very weak. And that's the key point that you have to take away from this webinar. The euro moves upwards, let's say, because of some events, they cause this euro currency to gain strength. But it doesn't mean that at the same time, the US dollar is extremely weak. Maybe the US dollar also, it's strong, but the euro is stronger. That's why it drives the euro US dollar market upwards, higher. Now, how can we know which of the two happens every single day? I think it's a question that everyone is about to ask now. Okay, so how do we know which one is stronger than the other? Well, I will show you exactly practically how to identify them on the charts. Okay, guys, but we have to finish with the slides and then we will go to the chart. So to make it simple, the same with the Great British Pound, US dollar. It's a simple correlation because it involves the US dollar in the equation. Now, the gold as well as the silver, like the XAG US dollar, that's a silver, it's the US dollar or it's the commodity priced in US dollar. So usually when the US dollar, the USD rises, the price of the gold, it has to decline. Okay, and that's very normal. And the silver with the US dollar. Now, in a nutshell, these two, they have approximately anywhere between 80 to 90% correlation. Okay, so I mean, when the US dollar moves upwards, the price of the gold declines. That's not the case all the time. Okay, now please pay attention. Again, we will see that on the chart as well. Please, guys, pay attention to this slide here. The complex correlation is the connection between two currencies that they do not involve directly the US dollar. But write this down. All the currency pairs we see on our chart, directly or indirectly, they do involve the US dollar. So let me tell you something. There is no such as a currency pair. There is no such as a, let's call it a thing, an event like Great British Pound against the Japanese yen. For this price to appear on the chart and to see the trends, there are two things happen on the back end at the same time, simultaneously. The first one is the pound against the US dollar, and the second one is the US dollar against the Japanese yen. That's why we call this as a complex correlation, guys, because the currency pair does not involve the US dollar, does not include the US dollar directly, but it includes it indirectly. So when you see the price on the chart, the price of the pound, Great British Pound, Japanese yen, and I just choose this one to give more emphasis on that. It's because it's here at the trading pit. It's one among the most tradable currency pairs from you, our traders. So the chart, Great British Pound, Japanese yen, it moves in a way that it's the outcome of what happens with the Great British Pound, US dollar combined with the US dollar, Japanese yen. Okay, guys, this is very important, extremely important. Once you understand how to move around with the correlations, you will go back to your trade and you will see that, oh, if I knew that before, perhaps I wouldn't have taken that trade. Or in the future, I can use this in my advantage to avoid going on in this type of environment that I will show you right now. For example, ladies and gentlemen, Great British Pound against the US dollar move upwards, okay, in a rising trend. In a nutshell, in simple words, it looks like the Great British Pound is stronger than the US dollar. Let's take that scenario. And in this one here, if we check the chart between the USD and the Japanese yen, Let's change the color. USD JPY, this also moves upward. So the US dollar against the Japanese yen, it's in an uptrend, and the pound against the US dollar, it's in an uptrend. So you take, in this occasion, it looks like that the US dollar is weak in the first one, and in the second one, it looks like that the US dollar is strong. Okay, so in this case, the Great British Pound is strong and the Japanese yen is weak. If you go now to if you find technically an opportunity on the Great British Pound JPY, for example, to go short, let's say the market, it's in a consolidation and it just broke to the downside of this consolidation. Okay, and you see a hammer at this point, or a doji candle reversal, something, sorry, not hammer, a shooting star reversal, or a bearish engulfing, something at this point here, and you want to short, you want to sell the pound against the JPY. How can you validate this signal, guys? If you go back to check what's going on with the majors as a group and understand, is the pound against the US dollar only that rises, or is the euro US dollar also on a rally? Is the AUD USD also on a rally? Is the Kiwi New Zealand USD on a rally? If the answer is yes, and you can identify that, okay, these markets, they gaining some strength. So when you come to this one here and you're about to sell a strong currency pair against a weak currency pair, then what's the odds of a good trade? Maybe this is a false, it's going to end up as a false trading signal. Okay, guys, this is the importance of currency correlation when you are about to take trades of any major or exotic. If you are trade, let's say the Euro Mexican peso or the USD Norwegian Corona, anything like that. I used to trade them a lot when I first started trading, because I was trading only the daily charts to learn how to trade effectively. The daily charts helped me a lot to develop as a trader. So I hope that makes sense, and you guys understand that this currency pair that doesn't involve the US dollar directly, it involves it indirectly. Next one, the maths are the same now, the equation is the same. If we are trading the euro against the Australian dollar, on the chart, we basically trade the euro against the US dollar, and at the same time, we are trading the Australian dollar against the US dollar. So if you check, for example, today, in the current moment, the euro Australian dollar, the euros chart, it moves upwards, okay? And if you check the chart of Euro USD and Australian dollar USD, today the euro has more strength against the US dollar, and the Australian dollar against the US dollar, it's a weaker. Okay, it looks like that it got really affected by the interest rates, that they remain unchanged in New Zealand. So and New Zealand Canadian dollar, it's when you are trading, when we trade the New Zealand CAD, we are trading the New Zealand against the US dollar and the US dollar against the Canadian dollar. That's what we trade in reality, guys. Okay, so as I said now about this, about the interest rates, guys, if you don't know it yet, here at the trading pit, every week, if you visit the block section here where it says tools block, if you go down to the week ahead market outlook, every single week, myself, on behalf of the Market Minds Mastery Academy, okay, I write the text about what we do. First, I make a summary of what, let's say, happened, if something significant happened the week before. And then I use all the major news events that I know from experience they're going to bring volatility, or they're going to affect the currency trading or the commodity trading that we trade here at the trading pit. And I make a summary, and I build trading stories around these events of potential trade setup if something stands out. Because once I prepare what I want to write here, I also check the charts and I see which technical picture matches with this fundamental forecast. And this one here, I gave you a clue that the interest rates in New Zealand, they are forecasted to remain unchanged at 5.5%. And I continue, usually when the interest rates remain unchanged, the currency depreciates. Okay, so that's a clue that most of the times, if the Reserve Bank or the central bank keep unchanged interest rates, we might gonna see the currency to fall. Okay, we're gonna see depreciation on the currency. All right, and if you scroll down, you're gonna see the 12 most tradable assets here at the trading pit from our traders, and I write you here the technical analysis of what to expect next week. And you guys understand, I cannot give you on the 4-hour chart specifically what we are looking for the day, because that's the weekly outlook, but it's going to enormously help you to understand what's going on in the big picture. And if you use the daily charts to draw levels, or on some of them, I create the technical analysis on the 4-hour chart with daily or weekly levels, but in a way that it's going to be more associated on the intraday trading later on. Okay, so it's really in a very simple way we write them, and it's very, very helpful if you go and read them. It's going to give you a good insight of what we might expect next. Also, I put wherever it's obvious, some blocks, order blocks, bullish, bearish order blocks. I point them on the chart. On the US dollar, on the WTI, US oil, we had a nice 4-hour order block here, as you can see, and we got the bounce this week. It was one of the good trades we took actually, and yeah, pretty much everything. You can find the analysis here. So let's go back to the webinar, and yep, we are here now. So positive and negative correlation. A positive correlation, guys, please remember, any questions, please feel free to ask them, and we're gonna flip on the chart in a couple of minutes. A positive correlation now is the alignment of two, a positive alignment, a favorable alignment of two currency pairs or assets. Like the Euro-US dollar usually has a positive correlation with the Great British Pound and the US dollar. And the Australian dollar, US dollar has a positive correlation with the Kiwi US dollar. Usually, someone now might ask, okay, Theo, again with this usually, why not 100%? Well, because when the euro goes up and the euro US dollar goes up and the pound US dollar goes down, let's say for that day, it means the euro is stronger than the pound, and that mainly caused this move to happen on this currency pair. Okay, and the same with the Australian dollar versus the New Zealand dollar, both against the US dollar. For example, if you're gonna observe the Australian dollar, New Zealand dollar, Aussie Kiwi daily chart, you will see a downtrend. Okay, but if you're gonna check the Aussie USD and the Kiwi USD, you're gonna see also bearish moves. So you have to understand when is the right time to trade the minors or exotics. And a negative correlation is when two currency pairs or assets move simultaneously in the opposite direction, like euro US dollar versus US dollar Swiss. It's one of the currency pairs we will see on the charts. Okay, guys, any questions so far? Please feel free to ask. So I put this chart here, but I prefer to see it on the on our platform. So let's flip to the platform now. For first one, guys, here I have on the left panel, I hope you can read the watermark. Here it's the dollar index, and right behind here is the gold, both of them on the daily chart. Okay, so first let's examine the correlation between the dollar index and the gold. We said earlier that they are very much very much positive correlated when the negative correlated when the dollar moves to the downside, the gold price appreciate, and that's normal. And we said that it's about 80 to 90% of the times. Why is that? Because if you see at this particular moment, at some point the US dollar index moves down, and also the gold price moves down. So there are times that, for reasons that as traders, and please listen to that, we don't need to have answers all the time, and that's okay. Okay, so for a reason, at some point there is no correlation between these two, and you see, let's say, a strength on the US dollar, and at the same time you see a strength on the gold, and you are, oh my god, I have a good signal here on the gold, it's a good setup, what am I doing now? Should I take the trade? Well, you just decide if that's worth taking the trade, if that setup is, if you accept the probabilities, if you accept the nature of trading, if you accept the averages, and if you know your trading system, how many times gives you winners, how many times give you losing trades. So everything takes in consideration. So, but let's say currently where the current price is, they move very nicely. The dollar goes down, and of course the gold goes up. So it's a negative correlation, and that happens most of the time, which for us, the traders, this is enough information. Okay, guys, I'm saying that because not only from my experience and how I remember myself being as a trader for the first 1 to 3 years, but afterwards, once I start coaching traders, and I see that some fundamentals of trading are missing from their development as traders, and one major part is, can you or do you execute the same setup over and over and over again. So you have a large sample of size that you can count on making decisions and keep trading the same setup or change? Or do you just count and do you take decision if you're going to change your trading method because you backtest on a software? Okay, guys, to backtest on a software, it's a very different thing and story. And sorry, I just add some subjects to these webinars, but as traders, you need to also understand that, for example, if you are backtesting a specific, let's say, let's find one here, just 1 second. Let's say you find this pin bar down there, okay, like doji, long leg doji candle, and you want to backtest and the validity of this setup, and you go on a software, any software, okay, and you're going to do your backtesting, and you're going to ask the software, you know, the last 2 years, find out on this 4-hour time frame or hourly time frame how many times that was a winning trade and blah blah for 2 to 1, 3 to 1, whatever. But what traders they don't understand during backtesting is that if you are a trader who lives in Europe and you are not trading the Asian session and the Sydney session, how can you validate that this setup taken in the Asian session can be it's going to be it won't be a setup that you're going to take while you are trading? So how can you use that winning or losing trade to make your average? Okay, guys, so please keep that in mind if you are using softwares to backtest. Okay, I'm not saying they are not good, not at all. I'm just telling you that there is something in this equation that can mess up with your results, and if you're going to go based on that results, you have to understand that maybe there is also some kind of error somewhere. Okay, so just keep that in mind. So enough we said about the gold. Let's check the euro, US dollar, and the USD CHF. So on the left, we're going to put the euro dollar, and on the right, we're going to put the USD Swiss. On this one here, euro US dollar, here it says euro US dollar down and USD Swiss down. Now we know, or if you don't know, I'm just informing you that the euro US dollar usually, and it has a very good negative correlation with the USD CHF. Okay, so but there are also times that when the euro US dollar, this correlation is not 100% of the time. Okay, there are times that it's a strong correlation. There are times that it is not. And also, if by any chance you're going to try to find softwares or indicators to measure the correlation, guys, remember that and I'm not saying any bad thing about this stuff. They're all pretty much work. I hope they work. You understand that in different time frames, the correlation is totally different. Okay, and the intraday correlation is where you have to be extremely careful. It's better to step backwards for a second rather to jump on and go through your daily charts and understand, or the 4-hour time frames if you are executing the 5-minute charts, and understand a little bit better about if there is a correlation here and if you're going to take that particular trade. So, and it's no point to show you all the positive correlations here, for example. the negative correlations, that when the euro US dollar moves up, the USD CHF moves down most of the times. But also you have to be aware that there are times like this time here that they didn't sorry, like this one here, not this one, that the correlation, it was positive rather than negative. Okay, and if you don't understand why this is negative correlation, it's because the euro, it's euro against the US dollar, and on the next one it's US dollar against the Swissy. So in the first example, in the first pair, the US dollar, it's the second currency, and on the USD CHF, the US dollar is the first currency. Next one is the Euro US dollar and the Australian US dollar. These, they have positive correlation, these two. So, but again, there are times like this particular one here, where the euro moves upward, okay, and the against the US dollar, and the Australian dollar against the US dollar is just trading sideways. Okay, at some point they both printed this nice pin bar at the bottom, and we are good to go. We choose which one we want to trade. Okay, some traders, they like back then to trade this false breakout down there. Some other traders, they preferred to take the trade on the euro because it already made this new high. That's based on each and every trader's preference. Okay, another correlation, USD CAD, USD Canadian dollar, and the US oil, W or WTI. Oh, US oil, USD CAD, US oil. These markets here, they are correlated. When the US dollar falls, it means the Canadian dollar advance. The price of the WTI or the crude oil rises. Okay, so because the export has to do more with Canada, and I don't want to get into that part, like what's the relationships between the currencies and the commodities and all this stuff. It's not for the webinar. So when the US dollar CAD declines, most of the times the US oil rises. Okay, guys. And the last one, Euro JPY, and I leave this as a standalone. On the Euro JPY now, the price moves upwards, and remember, what did we said before? This chart here, it's made by the Euro US dollar, what's going on here, and the USD Japanese yen, what's going on there. Okay, that's how this price on this right side is printed. It's based on what happened with the majors, USD JPY and the Euro US dollar. They make the division, and here is the pair. And you might wonder, why is that? Also, you can, for example, search for a currency pair like this JPY US dollar. You can go the opposite. That's why I'm telling you, it's good to keep an attention mainly on the majors, and then to go and execute on the crosses. Okay. For example, on the USD Canadian dollar, again, I don't remember if we had it on the blog for this week, but it was a level here at the bottom. We took it from the weekly chart, that it was very in a line with, it was a strong support in the market, or it was somewhere here, I don't remember. Anyway, and we got filled in this bullish order block based on a bullish engulfing of the 4-hour time frame here. Let me show you. So it was this massive move to the upside. From here, we saw this bullish engulfing, and then this was the we always had the spread. Okay, that was the room for opportunity. Instead of going to the hourly and to the 30 minutes and 15 minutes, anyhow, I will show you all this stuff in another series of webinars. We're going to do smart money concept. Okay, and if you are interested of learning about smart money concept, how we trade them at Market Minds Mastery, or if you know and you want to master them better, we're going to have, let's say, not the next webinar, the webinar after, we're going to start introducing the concept. But I went down to the hourly chart and I refined this one here, and we were somewhere in this region. Okay, this one plus the spread, it was a trade to go to the upside. It gave a nice 3-to-1, and that was it. Okay, now some people say, I will have leave the trade with, maybe we took profit somewhere there. Okay, it was also this room, but we don't know what's going to happen in the market, guys. That's why we don't stay. We don't know where is the end. Okay, and for those who may wonder, I also got a losing trade on the euro Australian dollar today from resistance that I found an order block. I shorted there on the hourly time frame, but it ended up as a losing trade. So yep, that's it pretty much. So guys, I think that's all from me today on this webinar about the significance of currency correlation in Forex market. Alex, are you with us?
Yes, I'm here.
Yes.
Thank you very much, Theo. It was another great webinar. As I get to
Thanks
see
for
there no
having me.
any more questions. So we're all looking forward to see you again next Wednesday, Theo.
Absolutely. Likewise. Thank you so much for having me here. Good night to everyone, of course, and to you, Alex.
Have a good night, everybody. Bye.
Thank you.
Bye.
Bye-bye.